The big news last month was Theresa May announcing that a snap election would be taking place in June. This came as a surprise because she'd previously said that the next election wouldn't be until 2020. Despite this, the news was welcomed by MPs who voted strongly in favour of the election going ahead by 522 votes to 13. The pound reacted favourably to the news, and it rose above $1.29 for the first time in 6 months. There's still a month to go until election day, but the polls would suggest at the moment that the Conservatives should be able to win by a fairly comfortable margin. The first round of the French election took place last month, and nobody won with a majority, so the two candidates with the most votes will go head-to-head in the second round on Sunday. These are Emmanuel Macron for the En Marche party, and Marine Le Pen, who stepped down as leader of the National Front last week, in the hope of distancing herself from some of the party's more extreme views. The markets reacted quite well to the first round results, and the French CAC 40 index climbed more than 4% on a single day. Of the two candidates, Macron is the strong favourite to become the next French president, as he's currently hovering around the 60% mark in the polls versus Le Pen's 40%. Large UK companies faltered slightly last month as a result of the pound's mini resurgence, and the FTSE 100 index fell 1.3% during the month. Medium and smaller companies fared a lot better though, as the FTSE 250 index gained 4.1% and the FTSE small cap index gained 3.1%. It was a fairly steady month for US equities, with the S&P 500 index rising by 1%. In foreign exchange markets, the pound gained in value against all the major currencies, including the US dollar by 3.2% and the euro by 0.9%. We'll be keeping a close eye on the French election results, and it will be interesting to see how the markets react to the winner on Monday morning. We've also got the build-up to our own general election going on, so that's adding to the political uncertainty at the moment. We still hold a fairly cautious view in our multi-asset funds, and we're keeping those put options in place should there be a major upset in the equity market.